applying. And Ignite, for those of you that are not familiar with Ignite, welcome to Ignite. We are basically for all things for minorities. We are here to bridge the gap, to make sure that you, no matter who you are, a business owner, an entrepreneur, a nonprofit leader, a high school student, a college student, somebody just trying to figure out what the next steps are. Guess what? If you're a minority, especially if you're Black or a female, we are here for you. And
Mhm.
so we were recently awarded a seed grant from the WK Kellogg Foundation to help us understand how to effectively and competitively do business here in the state of Alabama. And as a part of that, each month we have a multitude of activities and master classes and workshops that take place right here on Ignite's Facebook Live page, where you can come and get the information that you need to level up. I am so extremely excited and honored to bring our special guest to you today. Miss Demetris Curry. And Demetris, I want for you to take a minute to share a little bit about who you are so that they can understand all of your awesomeness. But the reason why I asked Demetris to join us today is because, and for the rest of this month, so go ahead, mark your calendars, make sure you get your friends, your family, your colleagues, anybody and everybody that you know. You guys need to start liking and sharing this right now, because she is about to tap into some wealth strategies that has been a little known secret, a best kept secret that's not such best kept for me, for us, as minorities, on how we can take something as simple as life insurance, right, and really maximize that thing to help us realize measures of success and wealth that we never could have even dreamed of. I'm excited about that. Ignite is about broadening your horizon, your thought process. Where you are now, I can assure you, if you connect with us and you tap in, you will be in a whole nother place a year from now. So without further ado, I present to you Demetris Curry so that she can help us really understand the differences between term insurance and permanent insurance, and how, yes, that can absolutely affect your business. So, Demetris, the microphone is absolutely yours.
Wow. I don't know if I can come after that, Tori. I just don't know. Thank you so very much for your warm welcome. I really appreciate the opportunity to work with you and to back up a little bit to talk about my story just for a few seconds is to let you know I'm a third generation entrepreneur. You know, I've actually been there. I know exactly what it feels like to start from scratch, to build up, to scale. And it has just been amazing to be able to work with so many business owners and say, hey, what is exactly we're trying to do? So I took that and I added it with the 25 plus years of being in the banking industry. And being in the banking industry, we had a chance to work with CPAs and CEOs and VPs and counselors and work with them on increasing their assets and being able to expand their businesses using, yes, insurance products. There are ways to do it in using insurance products. So I'm excited that we even have the opportunity to talk about this today and to work something even better, broaden the horizons of what our business owners are currently doing. So, whenever you are ready, let's go ahead and get to sharing. We want to look at some of the information that we have here, right? And so, we're going to start looking at some really great information. And first and foremost, let me just put hats off to Ignite for doing this minority business training. It is going to be phenomenal for people to be able to see what they can do with their businesses. Okay. And one of the things that I love about working with business owners is I get a chance to learn their goal. I get a chance to learn their goal. And so what we decided to do, and when you brought this to me, we started looking at what exactly can we provide in this atmosphere to help business owners in their insurance. We had to come up with a topic of listing for the entire month of April. So I want to real briefly, before we dig in, I want to acknowledge everyone that's involved with this program, with the SBDC of Alabama, Ignite, and teaming up with you, myself, to help in this training. We are inspired to help even further. So in the weeks to come, these are the topics that we're going to be talking about. Today, we're going to start off with term versus permanent life insurance. And then we're going to move into key man insurance. Please be mindful that what we talk about today is going to be the building block of what we learn the rest of this month. Okay. The rest of this month, it is going to be absolutely amazing about your business. Okay. Key man insurance will be our next topic next week, and what that includes for your business as a VP, as a general manager, and how you can use that to basically move your company to the next level. Okay. Securing collateral based commercial loans. That's going to be huge. We want to make sure that we touch on that. And what we talk about today in term and permanent insurance is going to build on that. Okay. Did you know that you can use life insurance as collateral for your commercial loan? You probably didn't know that. So we're going to make sure that we talk about that and what you need to do to get that started. Okay. Employee benefits at no cost to the employer. That is huge. Okay. Because it's going to allow you the opportunity to tap into those tax breaks as an employer for offering pre-tax benefits. So we're going to talk about what those pre-tax benefits would include. And then we're going to end it off with We're going to end it off right, talking about infinite banking concept and how to use your insurance to basically become your own bank. Yes, we're going to talk about that as well, where you'll be able to do that as well. Okay. So we have so many things that's coming, additional things that is coming. And so I want to make sure that we start on that. Okay. So Torin, if you had any other questions before that, is it safe to go ahead and jump on in? Yes, I got you. Let's go ahead and jump on in. So please be advised that we are going to be sharing some very, very important information here. It is on social media, so we have that disclaimer to please be mindful that when we start to do the Q&A session at the very end, okay, that this is a live segment. So if you have any private questions that you would like to have, or maybe a 30-minute free consultation with me, please make sure that we contact together. This is my business line at the very bottom here. And then also you can see that Calendly link to book some time with us directly. And we'll be glad to work with you just to answer some basic questions. So let's go ahead and talk about what I am not. I'm not a banker anymore. I'm 25 years retired into the banking industry and working into loans and residential originations of loans, and also finance securing of loan structures, $1 million and $1 billion bids for corporate bank entities. That's what I did for many, many years in the banking industry. I'm not an accountant. I actually work with CPAs, and I also work with tax professionals daily to make sure that we are doing exactly what the client needs. And I am not a business lawyer. So we want to make sure that you are aware of that, okay? And also, we're going to look at a few more things here in this area that I think you should be very aware of. What do you see here? And a lot of people are going to say, I see lots of fruits and vegetables, but you also see lots of textures, lots of fruits, lots of vegetables, and you see an array of how things are going to grow and how they're going to, multiply and things like that. That's why we are starting right here at this particular part of your business. No matter what level you are at as a beginner or if you're advanced, we're going to add on this data that can truly, truly help you. So, why are we talking about this today? Because there's no two individuals that are alike. Okay? There are no two individuals that are alike. Each particular type of business structure is different, okay? And because we know that, and because we know business structures are different, we want to make sure that we attack it as a, customized approach, right? So when you work with your insurance agency and your financial counselor and so forth, they're going to take a personal approach, okay, to what you have going on in your company. And so that's important to notate, okay? So let's start breaking out our pens and our paper. Let's start talking about some strategies. And we're going to start talking about why are we talking insurance right now in conjunction to business strategy? Why are we talking about this today? Okay? And is it important? It is important. Let's talk about what insurance is. Number one, okay? The insurance, traditional way of insurance is most what people mostly think of. They think of, I want to leave some money behind for my family. I want to leave some money behind, to pay for debts, possibly, maybe for a good burial, right? That is the traditional way of insurance. The traditional way of insurance is we want to have more insurance, less cash value. Okay. Why is that? Because the main concern in that particular structure of insurance is leaving death benefit behind, right? But there's also what we call a blue bucket insurance. The red bucket is a traditional way. The blue bucket is actually more of a Wall Street way. And the Wall Street way of insurance is where you have lesser insurance death benefit left behind, but you also have higher cash value. So it's a gear and it's a balance of which one is more important. Are you looking more into leaving money behind for death benefit purposes to pay off home, possibly to leave to your children, or if you just need something for burial? That's a traditional way of insurance. On the opposite side of that, the wealth benefit, okay, of Wall Street way is using that cash value more so as a somewhere to build another way of income, right? Or strategy of building up cash assets or cash accumulation. All right. There are tax advantages on using the Wall Street way. There are index growth. Yes, index growth on the blue side of the atmosphere in insurance. And the retirement cash flow, you just cannot deny, is there, right? So let's talk about those things and let's break it down a little bit more to the next level of what that means. Traditionally, like we just stated, distributing money for beneficiaries, paying off a mortgage is possibly a concern, provide for your college education for your children. That's another way to use your traditional insurance, okay? Pay for the final expenses of funeral. That is the main thing, right? And then provide an emergency fund for unexpected financial crisis. That also helps there. And then provide for settlement of personal debt. So if you leave debt behind when you do pass, that kind of thing, and you don't want your family to have to deal with that debt, that's another reason, all right, to get a traditional life insurance policy. So we're going to talk about term versus permanent. Essentially, term policies, okay, the advantages of a term policy is just that it is there for a specific term. That means it is there for a 10-year, maybe a 20-year, or possibly a 30-year term. Now, that means that, let's say, for instance, you're in your 30s, possibly your 40s, and you are in a good way where your health is good and you don't have to have any rated insurance, which means you don't have any physical or health challenges that may push your rate up higher, right? Let's say you get a 30-year policy. That means that policy will expire in 30 years. When it expires or when it's time to be expired, you have the option of converting that policy into something more permanent. Keep in mind that when you do that, a term policy is based off of your then age and your then health. Okay. So when you achieve the policy at first, yes, you're in good health. You are possibly, not have any challenges with diagnosis or things of that nature. If that's the case, you're going to get a pretty good rate on your term policies. And term policies are the cheapest on the market. Okay. Because most times they don't pay out as long as a permanent policy. Okay. Now, here are some of the advantages of a term policy. Like we just said, they cost less, buys a larger amount of death benefit for you, usually can be converted into a permanent policy later at your later age and later health. Insured has to pass for benefits to pay out. Not necessarily a great advantage, but it means that you don't have to pay the higher cost, okay? In the beginning, as a permanent policy would normally cost you because it is permanent, okay? Can be used to pay out a specific reason. We just talked about that, mortgages and so forth. Premiums can be level. And what that means is that your premium payment can be steady, consistent, the exact same amount each and every month. Okay. All right. But then there's the disadvantages. And we did top on that just a little bit about the 10, 20, 30 year. Okay. It is completely death benefit driven, which means you don't have any cash value built into it. And once it expires, it is gone. And the monies that you put into it up to that front means that you're not getting any cash value out of what you put into it at that point. Either when it expires and it's gone, and you have to renew it at that time if you decide to do so. Most policies can be canceled at the end of the term. Renewal, of course, is an option at your then health and your then age and does not earn cash value. We talked about that. And then the other part about this is that some term policies are not level. Some of them actually have an increasing benefit to it or an increasing premium to it. Okay, so the increasing premium, let me explain how that works. So, say for instance that you have a payment right now and you've gotten a term policy and you wanted to try to get it extended as long as possible, but they did not do permanent policies at that carrier. Well, what they would typically do at that time is that they will give you a policy with a smaller amount of premium at first. However, over the course of the years, between 5 to 7 years, you will see a gradual increase in your premium. Okay, so that is a increasing term policy. All right, so that's one thing that is not necessarily a great benefit to having a term policy, but if you are, really looking at your budgets and you can't afford anything a little bit higher than what you currently have, and budgets are tight, it's a great way to get started until you're able to move over to another type of policy. Why is this important? This is important because there are times when you're working in your business that you want to make sure that you have something behind to leave to your business structure, maybe a business owner or something of that nature. You definitely want to have those things in place, okay? Let's talk about some of the permanent coverages. Now, there's actually three choices of permanent coverage. You live the whole life, the universal life, and the index universal life. Today, we're going to talk about the whole life and the index universal life. The universal life is a little bit more volatile to the market. So we're going to talk a little bit more on the whole life and the index universal life, which gives you a little bit more comfort. Okay, so the permanent insurance as a whole, here are some of the advantages of a permanent policy. Offers lifetime coverage up to 120 years of age, okay? Earns cash value, which can be borrowed against tax-free if customized as such. And we're going to talk about that more, okay, as the weeks go on and we're starting to talk about breaking down these particular type of policies, how to implement them into your business with key person policies, with commercial loan collateral, and all of that. We're going to dig deeper into how that plays into that. So put a pin in that right there, make a notation that we talk about that a little bit more in detail, especially on the key person and the commercial loan insurance policies. Okay. Usually cannot be converted into a different policy later. Once you go permanent, most times you move over to another permanent, another permanent. So that is the way it's normally structured. Can be used as a long-term approach to income replacement building. This part is very huge as well for business owners. Okay, we are zoning in right now on business owners, whether you are self-employed or possibly a corporate structure. Maybe you're an LLC or a DBA. However, S corp, no matter how you are structured, you can use your insurance policies to create an income replacement building for you later. And we're going to talk about that more as the weeks continue on. So that's why we're talking about this today, to build that foundation of what to expect week for week for week. So this will be a building block training the rest of this month. Please make sure you tune in for that. Disadvantages of a permanent insurance policy. Cost more than terms, that's definitely a disadvantage. It's, as you talked about earlier, the term policies are cheaper normally. Okay. Most permanent policies are more affordable. Okay. And they're more flexible than others, like the whole life and index universal life. Okay. These particular policies can be a little bit more flexible. Normally, the index is more flexible than a whole life policy when it comes to premiums and skipping premiums and building up enough cash flows where you can have a surplus to fall back on a little bit later. Maybe take some time off from making your payments if things are going through a hardship or a recession. All of those things are part of a flexible premium policy here when you're talking about index policies. We're going to dig into that much, much later, but that's going to be something to also keep in mind. And then must be customized by an agent according to regulations for tax advantaged loans. Did you know that you can loan against your policy? Yes, you can. Okay. And you can put more money into your policy than what's needed for death benefit. Let me give you an example of that. Let's just say that you are wanting to get a $500,000 index policy, just throwing that out there, right? The cost of the death insurance coverage, part of it, which is what it costs for you to get death insurance on yourself within that policy. That means your physical, your health, whether you're a tobacco user or non-tobacco user, all those things come into play. What is the rate that it would cost for the insurance portion of that policy? So you take that amount of that premium, and let's just say it's $100 or $200, whatever it is, right? If you decide, hey, I want to also put more money in the policy than what's required to actually have my coverage, what happens to that difference? It goes into a cash bucket, and that cash bucket gains interest, right? What we're talking about right here on this particular section must be customized for an agent to meet MEC limits. Then that tells us exactly how much you can put into that policy according to the IRS and still keep it as a great advantage policy for you without any tax implications. We're going to talk about that as well as weeks unfold. So we have a lot to discuss here, but I wanted to make sure that we were all together, right, on what the advantages and disadvantages are for these type of coverages. Now, let's get to the root of the meat and potatoes here. Let's talk about this for a minute, okay? Because y'all make sure I don't go too far because I get too excited. But let's stop right here for a second and let's talk about risk tolerance for a moment. Now, because I am licensed to do multiple things here, I wanted to make sure that we made a true understanding between the insurance side of the house and things that's more volatile. Okay, so on the left side of this lever, you will see there are things that have high possible growth and low and high possible loss. Those things are on the stocks, mutual funds, variable annuities, and bonds. That's on the left side of this lever, if you pay attention to that. Okay. But on the opposite side of that lever is more low risk assessment items that you can use as putting some monies away for your business, right? Or putting or starting yourself into a retirement. You can do that using some of these other areas. And so, what you're going to be looking at is when we're talking about insurance, we're talking about this area right here. Okay. We're talking about the insurance side of the house where there is possible growth and no loss section. Okay. How do you take advantage of that? Right. This is what business owners, corporations, have been doing for many, many years. When I worked in the industry of working with commercial loans and building commercial loans for different entities and helping them get finance to buy land and property and franchises and to expand their businesses with new locations and so forth, right? One of the things that we would do is we would work with them to create a life insurance policy, okay, where they can build cash value into it, but at a higher rate than a normal whole life policy, right? So it showed them exactly how to use that as an asset to their business, right? And not only that, to use it as collateral for that new business venture. Yes, we can do that. You can definitely, I know you can excited. Don't get too excited for me, right? But this is something that I get so passionate about because I did it for so many years in the banking industry. And I said, you know what? It's time for us to share this, to tell people about it and make sure they understand. So let me show you one thing here that I think this is going to be probably the game changer for you to understand what we're talking about. So the fixed strategy, this is the history of the 500, S&P 500, okay? The index strategy, the market strategy, and the fixed strategy. Let's talk about what this means in insurance, okay? Now, the market strategy is what we looked at a little bit earlier. That is the stocks, the mutual funds, the things of that nature, right? That's what that is. 401ks, that's what that is. You see the volatility of the market, right? You see that these are historic figures. You can look this up online. This is public information, okay? You can see this information here. Notice that we had a dip in the S&P market in 2002, back in 2008 when we had subprime lending and things like that, when things went completely crazy in the market. What did they have to do? They had to wait on the recovery. And that recovery may have taken some time, right? May have taken some time, but they still did recover. It's just that you had to basically wait on it for the recovery, right? Now, what is the blue line? The blue line is a fixed strategy, maybe things like fixed annuities, things of that nature, right? Those fixed annuities, what they did was they actually have a consistency of income, right? Notice that when the market dipped, that fixed strategy did not. It kept on gradually growing, right? Gradually growing. And that's because it's fixed. And right here, you see they use 5% as the example, as a fixed 5% growth, right? When we're talking about indexed and what that means in insurance and index policies and things of that nature, we're talking the green line. When we're talking about key person policies, we're talking the green line. When we're talking about commercial loan insurance policies, okay, where you can use for your strategy into getting a commercial loan and how to have a policy to secure that policy, to secure that loan until that loan is paid in full. And then you can take that loan over or take that particular insurance over, right? We're talking about that green strategy, right? So that's why I want to bring that forward so you could see what that means in insurance, right? So say for instance that you have a policy, a key person policy, or possibly a commercial loan policy, right? And then maybe even a collateralized policy that you're holding for your franchise or for your business. Notice on this particular line here, when the market dips, it locks at a 0%. And that means that particular policy has a floor built into it, a protection floor against recessions and inflation. Why is that important? That's important because you are in the business of making money. You are in the business of making sure that your assets are growing. You are in the business to be able to have an income replacement later when you retire from that business that you've put all that 15, 20, 30 years into. You are in the business of making sure that your key person policies are building great value so that if something was to happen and that person's no longer with you or that person moves on to another company, you can afford to tap into that policy and give a bonus or possibly bring on a new VP or a new CEO, tapping into that particular type of policy. That's why this line is so important in the business structure. Okay, so let's go back to it. So that line right there, notice that dip, what happened when that dip in the index strategy, the market strategy dip there, the index strategy locked at 0%. Now, let's just say that the economy is still doing well. It's still doing well. It's starting to grow up again. It's trying to move on up. And that volatility is not that there. They're not bad right now, right? Now, here we go again. There it goes. We had a subprime lending issue in 2008. What happened? That dip in the market of that negative 38%. For those things that were already in the market that didn't have a floor, that insurance product that you use for those things that we just talked about locked at 0%. Now, what does that mean? That means that you're not making money in the market at that time, but you're not losing money either. Okay, that's a great thing to know in this. Now, one last point. Notice that they all started at the exact same point in 1997 at the exact same amount of $100,000, okay? But at the end of the time frame, notice the difference between the value in this growth and the value in this growth. All right? We're going to talk about this more in detail a little bit later on as we dig more into key person policies, and then also as we dig more into how to use insurance as a collateral to your commercial loan and how to use those things to help you with retirement building, okay? That's one of the things that we'll talk about a little bit later on. But I wanted to dig into that just to give you an understanding of why we're starting off explaining the difference between term and permanent insurance and how it relates to your business, okay? What else can you do with your insurance and your business? Risk management, okay? Cash accumulation, we've talked about that. Advanced market retirement building, we just talked about that. Generational wealth building. Yes, you can do this for not only your business, but you can do it for your household and your children. They have the exact same type of policies that you can build for them to give you the same type of effect. Key person policies, we just talked about that. And then commercial loan collateral, right? Those are the main things of how to use this in your business, okay? So we just talked a little bit about index universal life versus whole life, okay? Move that to the other side. And so flexible payments, we talked about that. You make changes to your benefits. You can do the changing of your lifestyle according to what's going on. We do have that as a flexible part of the policy. Accumulates cash value. Now keep in mind, whole life policies and index policies both build cash value. Very important to notate that, okay? Because whole life policies, they have a different structure of adding dividends to them. And then on the index side of the house, you have a compound interest cash value. Two different ways of saying it, but they both give you some type of return on there. One is a little bit more aggressive to the market than others, have a little bit more return than other options, but they do both build cash value. So let's make sure that everyone is on the same page there. Okay. All right. And then policy features may be tailored to your needs. That's on the index side of the house. So more flexibility there. But on the whole life side of the house, benefits do not change while the policy is in effect. That's very important to note. And premiums do not change. Okay. So premiums remain the same. You don't have as much flexibility, but your premiums stay the same. That's important to note there. Now, remember, term policies are the cheapest on the market. Why? We went back to that because this is geared towards death benefit only. But if you want to have something different than just death benefit, every household is different. Okay, you may not want just death benefit. If that is the case, then you need to look more so on the permanent side of the house in insurance. Okay. All right. So we are going to look at one or two things. How do I know what type of insurance is best for me? How do I know what type of insurance is best for me? Okay. Now, this is how you know. This is how you know. Ask yourself that question. What is my plans? What do I desire to do with this coverage? Okay, what do I desire to do with this coverage? Am I trying to just leave money behind to my children and possibly pay off of some bills? Maybe just make sure that they don't get left behind with my debts. Possibly make sure they have a lump sum to put away into savings, right? Where they can use little by little to replace your income. Because one thing that we tend to forget as people, okay, is that when we are gone and our family loses us, right? They don't just lose us. They don't just lose us as being in the home with us, laughing and joking and having a good time and being able to lean on one another. They don't just lose that. They also lose the opportunity to use your income to help with day to day bills, right? So if that is the case, and you want to make sure that that particular person that you're leaving behind, whether it be a spouse or children or so forth, right? You want to make sure that they are in a position to not only miss you one way, but missing you two ways, right? So that's one of the things that you want to ask yourself, is that my goal? Okay. If that is your goal, you can do it with a term policy, but you can also do it with having a whole life or a index life, a permanent policy, which offers an additional information. Okay. All right. An additional cash value. Ask your agent to do a suitability analysis for you on your lifestyle business needs. Okay. Now, if you don't have an insurance agent, then that's why we're here. We're working with Ignite Alabama. SBDC has pulled this together for a reason, to work with everyone to make sure we can help in all aspects of building your financial structure in your business. So, and this is just one small element of what that entails. Okay. So if you need someone to assist with that, make sure you stay tuned to the end where you can get that information on how to connect with Ignite. Okay. Do you plan to expand your business? Do you plan to expand your business? What do you have in place to aid in that? So let's say that you are a owner of maybe a small mom and pop shop, okay? And you want to one day have a few more locations, right? So that is a great way to use your policy to be able to build some value. And some values do take longer to build. So we're going to talk about that too when we week, when we start talking about how to build in your insurance. Some things build much faster than others. Others take more time. So we have aggressive approach and then we have a non-aggressive approach. So all of that is going to be covered in the weeks to come. Make sure you get that information at the end, okay? And then are you considering getting a commercial loan for a new company, for inventory, building, maybe a new location, land, possibly you want to get your land leveled off and possibly bring something there. Those are some of the things that you use a commercial loan insurance possible for collateral. Okay, I do these all the time for banking institutions that call and say, hey, we have a commercial loan. She needs some insurance as collateral. We write that collateral documentation. What happens in that particular location is we work with the bank to be the secured person of that particular commercial life insurance policy. The life insurance policy is put on the business owner, okay? And then the bank itself has a lien on the policy where they cannot give that particular policy, or the benefits can go to anyone else but that banking institution until that loan is paid in full. So it becomes collateral to that particular commercial loan, okay, until your commercial loan is paid in full. Now, what happens after the loan is paid in full? We can actually work with the bank to release that insurance policy to the business owner. So she would then, or he would then, have the ownership of that policy without any liens to the policy. Okay. And that means all the cash value that you've built into that policy up to that point is now yours to be able to tap into for loaning against later. We're going to talk about how to loan against your own insurance policy. All of that information is to come as the weeks unfold. But today, we just want to make sure we cover the basics to make sure you get ready for what is coming the rest of this month. Okay. Now, each week we will break that down. We just finished talking about that. We're going to break that down to even more information, okay? And we're going to ask for some questions. Let me go back a little bit for anyone that missed the slide early in this conversation as far as what to expect in the weeks to come. So today is the 1st, April the 1st, right? So we talked about term versus permanent insurance coverage. This is what's coming up the rest of this month. Key man, securing collateral. We're going to dig deeper into how to use those particular type of insurance policies for your key man, whether you are a VP, a CEO, if you are a general manager, why even put a key person policy on your board members and things of that nature. If someone was to leave your company, how it would hurt you in so many different ways. We're going to talk about those ways of how that key person can hurt you being gone. Even if they were to pass, how that could affect your business. So we're going to talk about why put a key person policy on your really key person in your organization. And then we're going to also dig into that securing collateral based insurance, how it's structured, what the rules and regulations are with the banking institutions, okay? Who is the insured? Who is the owner? Who is the beneficiary? How do I get that particular policy in my possession after my loan is paid in full? Is it mine? Do I have to give it up? We're going to talk about all of that in the weeks to come. Employee benefits to the employer. How can I offer pre-tax benefits to my staff and still not have to pay for those benefits as an employer? There are ways to do that. You can offer things to your staff at much discounted rates, the same rates that large corporation receives, okay, where they are able to get things like short-term disability, life insurance, cancer coverage, accident coverage, right? Critical illness coverage, which also includes COVID-19 coverage. All of that is going to be built into that segment of how do I offer benefits to my staff where I don't have to pay for it as an employer. And then the discounted rates the employees receive just because they signed up for it through your organization. We're going to talk about that too, okay? That's a benefit to your business. Why? Because it makes your business more attractive to staff that want to come work with you, that want to stay with you. People tend to stay with companies and become lasting employees within your company when they feel like they have some coverages and have some benefits that they can lean on in case of health crisis. So we're going to talk about that and how that can help you in building your business, okay? And then in the end, we're going to take it to the next level. The next level is infinite banking concepts and how do you use that? Now, the infinite banking concept is really a combination of the key man, and it's also a combination of how you can use some of that collateral based information, but it's going to tell you how you can use it on a personal basis as well, not just on a business basis, but also on a personal basis of how I can use the infinite banking structure to one day be able to use my insurance policies to pay off things like my house and pay off my car while I'm living. We're not talking about once you pass, we're talking about how to use your life insurance as an infinite banking structure while you are living and be able to pay off things and debts and monthly expenses using your insurance coverage. Yes, there are ways to do that. So I get excited about that thing. So Torin, I know that you are in the background listening to all of this and you are just like, what in the world is she doing? But we are so super excited about this. And so I want to go back to you and I want to open up the floor to some questions these last few minutes that we have and just get your input on what we've talked about today. I can hear you.
You can hear me. Okay, perfect. I just thank you so much, Demetris. I am so excited about the wealth of knowledge that you are bringing, the clarity to help us really understand because we don't know what we don't know. And so, for those of you guys that are joining us, welcome so much to Ignite a masterclass with Demetris Curry. We are just breaking down and getting you to a place where basically, to sum it up, Demetris, what I want for them to walk away with and understanding is that as a people, it is so time for us to be proactive and not reactive.
Right.
And we've heard over the years the importance of life insurance. I am very hopeful that everyone has it. If you don't, I need for you to go and to start looking into getting some today, if nothing more than for the traditional reasons why those things are important. But what Demetris is sharing with us and helping us to really understand how to maximize every opportunity. That is what doing business in Alabama is about. It is truly about helping you get to your Z, no matter what that looks like, because A
Ooh,
to Z for all of us is totally different. And
yes.
so it is extremely important, though, that you look at your life. This everything that we do is intentional. Yes, we are now in the fourth month of a brand new year, but that also means that the first half of this year is almost over. So
Mm,
we're trying to get you ready to make sure that as you transition into the second half of this year, because all of us, we do, January comes in and we have all of these resolutions. We're going to do
look
this,
at
we're going to
that.
do that. And then life happens to us and we find ourselves a lot of times in the same place we were
That's
in the December and November of the year before. But what we're saying to you is that the knowledge that Demetris is bringing to the table, the knowledge that Takia brings with the wealth frequency every Monday morning at 5 a.m., the knowledge that is coming from our friends at Regions Bank with their midday tune up. We have for those of you, and this is all of us, you're business owners, you're entrepreneurs, you're nonprofit leaders, you have people that help you and that you need to help make your business succeed. Starting this upcoming, well, not this Sunday because it's Easter, but the following Sunday, the 11th, we're doing a whole series on Sundays on human resources, right? Really breaking down, helping you understand that and how you can really maximize your greatest assets and capital, which is your people.
That's right. That's right.
Relationships are our greatest form of currency. But this, as it relates to the insurance, is really important to me because I don't know about you guys, but for years, I literally got caught up in just being a supporting cast member in my own life. And I lived so beneath my potential. And so now at 44 years old, I found myself with no retirement, right? With no plan. So as we're in this transition, we paid one car off, we're about to pay the next one off. We've decided as a family not to get any more car notes. What our priorities are is number one, paying our home off. So now all of that money that we were putting on car notes, now we're taking that extra and hitting our principal on our mortgage with that. But then also being aggressive with our insurance and the things that Demetris has taught us to help us. Basically, God is using her, gave us strategies to redeem the time. For those of you that are people of faith, I need you to understand that faith without works is dead.
Yes.
And ignorance is no excuse for you not to win at life. And you have Demetris that has carved out time for the next 5 weeks. Today was the first of 5 different sessions where she is going to drill down and break it down and help you understand different things that will take you and your business to a whole nother level. But you've got to tap in. You've got to take the action steps today to make your tomorrow better than your yesterday. The only thing that stands in between any of us and greatness is us.
It's us.
It's
Absolutely.
us. A lot of people, I'm a woman of faith. So, people are always talking about the devil. They always talking about the enemy. The enemy did this. No, it's
Yes.
not. Poor
Yes.
thing. Wait, poor thing. I almost feel sorry for him because Demetrius, we give him so much credit, but it's not the enemy. It's
Yeah.
your inner me.
It's the inner me. I
It was
absolutely
my
love
inner
it.
me.
Yeah.
It was
Yeah.
my inner me, but
Yeah.
then the Lord sent a Demetris Curry into my life that helped me
Oh.
understand that the now we were doing well. We've had life insurance. We've been paying that, but what I thought it wasn't that. And
Yeah.
she helped me understand that. And
Mhm.
now I've made some decisions. I don't care who you go with. What I do care about is that you make sure you educate yourself and you are
Right.
informed and you understand and you make whatever the best decisions are for you, your family, and your business.
That's right.
But
That's
it
right.
starts with understanding. Understanding is everything. So, Demetris, as we get ready to wrap up, I love leaving them with homework. So,
Yeah.
what are some things that they can do between now and then when we come together again next Thursday at 11 a.m.? What are
Mhm.
some things between now and then that they can do based off of the information that you shared with us today that they need to go back now? Because this is the last thing I'm going to say, and I'm going to let you wrap us up because
Okay.
people remember this, y'all. People don't do what you expect. They do what you inspect.
Ooh, look at you. I love it. I love it. And you're so right about that. You're so right, Torin. One of the things that we need to make sure of is that you want to first know what your goal is. What is your goal? We were talking about that a little bit earlier in the slides of what is your goal. So I'm going to challenge everyone right now to write down at least 3 key points of what you want your insurance to do for you. And let me give you some examples. Do you want to just leave death benefit behind? Do you want to try to grow your assets, your income? Would you like to have an income replacement later because you haven't built a retirement yet? Have you even thought about what do you want to do as far as having a coverage in critical illness? Yes. Did you know that your life insurance can cover you in long-term care? We're going to talk about that more as well. So are those some of the things that you are really considering? So I want you to write down 3 major points between now and next Thursday. When we come together next Thursday, I want you already have in your mind what are those 3 major points of what you want your insurance to be doing for you, because your insurance needs to be something that you can use while you're living, not just when you pass. Okay? I always tell people, hey, if you're going to put some money into it, consider this. If you want to have it where you can use it while you're living and not just to leave behind to the living. Very, very important to write down those 3 major points. And then the next thing I want you to do is I want you to pull your declaration page of your insurance. Pull your summary page of your insurance. Check and see what you have, when or if it ever expires. Have a game plan, create a game plan on if it's expiring soon, what are you wanting to do with the next thing that you roll it over into? Okay. Are you going to roll it over into the exact same type of product that you currently have? Or do you want to try to roll it over into something more permanent? We need to make sure we start talking about that right now. Put those things down, write them down, pull your declaration page. If you don't have your declaration page, contact your agent and have them to email you or send you via mail a copy of your declaration page. The fastest way to get that is to ask them to email it to you, okay, between now and next week. So say, agent, A, B, C, D, E, F, G, I need a copy of my declaration page because we're just doing the evaluation of our business and evaluation of our home, and we want to see what we have set up. That's all you need to do. And to put that information to the side. Okay. So these are the 2 major things that I'm going to give you in homework today to start doing. Write down those 3 major points, pull your declaration page. Let's see what you currently have. And then when we get together next week and we start talking about key man policies, oh, you're going to be excited. You're going to be ready. You're going to be ready and say, oh, I know what I have. This is what I put into place a couple of years ago. Now, what do I need to do again? And then also, you'll have those 3 major points and you know exactly what you want your policy to do for you. And you'll have a Q&A ready for me. You would say, hey, I got a 10-year term. I have a 3-year term. And I have a permanent policy. Does my policy does A, B, C, D, E, F, G, what you just told me? Does my policy cover my mortgage? Would my policy leave me some cash to my children? Does my policy cover my business expenses if something was to happen to me? All of that is what we're going to be talking about in the weeks to come. And keep in mind that you can send me a message, and I listed here at the very bottom my contact on Calendly, so you can make sure you put 30 minutes to the side and book 30 minutes of free time with me if you want to talk one-to-one about this particular segment with the Ignite and SBDC. We'll be putting you on Ignite's calendar with Calendly to spend 30 free minutes with me to just do an evaluation of what you have, facts only. This is what you have. Tell me your goals. Will this work for that type of policy that you have? That's what we're going to be talking about.
I absolutely love it. And Demetris, if you'll do me a favor and stop sharing, because we're going to go ahead and wrap this up. For those of you guys that have not already registered for the Doing Business in Alabama program, what you waiting on? Like, what are you waiting on? This is the type of support and the knowledge that you get through this project. We are about helping you win. So if you have not already, I need you to go to Ignite's website, www.igniteal.org, today and take a look at the Doing Business in Alabama page and look if you feel synergy, if you feel like this is something that's going to be able to help you and take your business to the next level, it is absolutely at no cost to you. Now, it costs us and our community partners a whole lot to bring this type of information and support to you, but you're worth it. Doing Business in Alabama is about providing you with the team that either you cannot afford at this moment or you don't understand that you can't afford not to. So, who is that team? You'll get a business coach. You'll get a finance coach. You'll get marketing and communications coaches. You'll get legal services. Our friends over at Bosch and Bingham is literally for those of you guys that are revenuing less than $500,000 a year, they are providing you 50 free hours. Did y'all hear me? 50. 50 free hours of legal services to help you and your business. Like, this is serious. Our
Mhm.
friends with the Small Business Development Center, if you're not familiar with the Small Business Development Center network, you need to look them up today. I'm going to put their information in. I've already placed Demetris Calendly link in. I'm going to also put Ignite's website information in, and I'm going to put the Small Business Development Center's information in. If you are a small business owner or an entrepreneur, or somebody's just thinking about like you want to start a business, that's the stop for you. As our friend Andrea Rogers Mosley, she's a director, the SBDC director at Alabama State University. She says that SBDC helps businesses from the cradle to the grave.
Oh, I
That
love
means
it.
literally everything that you need for your business, they have it. If it's nothing more than they have partners like Ignite, they have partners like Inspire for Greatness and Demetris Curry, that we're here and we help you identify what it is that you need and we connect you with it. We're just a great connector. That's who we are. That's what we do. And so I just want for you today, make a declaration. This is no trick. This is no game. You know, traditionally, the world calls this April Fool's Day.
Mm.
But where it was intentional that we started this today because the games are over. The
Oh,
tricks are over. We're not
mhm.
playing anymore, y'all. It is time for us to be intentional. You're looking at a 20-year veteran as it relates to nonprofits. And I'm telling you that prior to COVID-19, honestly, y'all, there was no such thing as a business grant. Okay? It wasn't. But the strategies that Demetris is teaching us, you're in being proactive, you're literally going to be able to put some things in place today that 10 years from now, 20 years from now, and if you're able to be more aggressive, if you're willing to make the sacrifice like me and not go and get another car note and roll with what I have, and that gives you a little extra cash, because here's the thing, you've got to be realistic with what you have. Timing is everything. Seasons are everything.
That's
So
right.
at the end of the day, if it's winter, you're certainly not going to be walking around outside in your swimsuit.
Mhm.
So right now, if you're struggling, if COVID really like you took a hit financially, I don't need you to go and to start making these rash decisions and doing things that are hurt you. No, that's not what this is about. What this is about, because it could be that after you get finished meeting with Demetris and her team, that it's a delayed, but it's not a denial. But then she can help you come up with a strategy on how you can get to a place where you can do the things that you want to do. And there's nothing wrong with that either. I need you to understand that what matters to me is that you do what is best for you. And what's best for you, it looks different than what might be best for me, than what might be best for Demetris, but it doesn't matter. It doesn't matter. All that matters is you. So, as we wrap up, if you haven't already, look back in the links. You'll see www.igniteal.org. We have a plethora of resources and professionals and experts that we bring for you. weekly, daily. There's something going on. Starting next Monday, we have something every day. Coach Takia is going to be with us at 5 a.m. with the wealth frequency. Our friends with the SBDC has something going on. Like, y'all, there's something every day. Look out for our calendar. If nothing else, get on our email list so that you can get the calendar of activities. Even if you look at doing business in Alabama and you decide this isn't for you, which you crazy if you do, because if it is, if you're a minority, it's for you. But hey, who am I? If it's not, at least stay connected so you can get a copy of the calendar and you can be able to take advantage of all the things that are available. Again, do what's best for you. So, Demetris, thank you so much for today. We are so grateful. We're so appreciative, and we cannot wait until next Thursday, same day, not same date, but same day, Thursday at 11 a.m. And she's gonna help us understand about this key man policy thing. Y'all, it blew my whole mind. It really did. Y'all know Miss Torrin love to talk, child. I was quiet. I was like, what?
What?
She was like, are you there? I'm like, yeah. I got so quiet. Yeah, I'm here. I just can't, like, I can believe it, but I can't believe it. So y'all, look, y'all come back because y'all gonna be the same way. But guess what? I didn't just leave with my mouth wide open. My husband and I had a discussion and said, you know what? We're not getting another car note. We're not getting another truck note. Now, this is what we're going to do. We had already reserved one to go towards the extra principal on the mortgage. Now, this other car note, we get finished paying this one off. That one, we designated for us because we needed to be aggressive because I didn't do what I needed to do in my 20s and in my 30s. Now I'm in my 40s. I got to redeem some time. And all I'm saying to you is, again, do what's best for you. So until next time, you guys have an amazing day. And as this is my theme, I think, for the rest of my life. We gonna win on purpose.
On purpose.
Bye.
Bye.